Hello and welcome to Ticker Tapes. Today we're looking at the crypto space, specifically Bitcoin, Ethereum, Ripple, Cardano, and Coinbase. So let's get started. There wasn't much fanfare around Bitcoin's 13th birthday at the start of the year, and like all teenagers, Bitcoin can be stroppy and poorly behaved from time to time, which it has lately off the back of Fed setting out a timeline for tightening policy and unrest in Kazakhstan of all places. Now look back a year to the Chinese government's sudden decision to ban Bitcoin mining. Well, after the US, the number one destination for Chinese miners was Kazakhstan. So the government's decision to cut off the internet amidst an uprising naturally had an effect on miners and caused a crash in the hash rate. And throw in a cascade effect of high leveraged liquidations for good measure too, and we can see why the price crashed. Data from Google sheds some light on why the Ethereum price has been under pressure over recent weeks. Research shows that on January 6th, Google searches in the UK using the terms "sell Ethereum" rose by 972%. The price of Ethereum fell by more than $400 on that day, and this suggests that the self-reinforcing network effects that are so important to cryptocurrency development can be just as effective on the downside. The Chicago-based CME pioneered the introduction of Ethereum futures and recently introduced a micro-sized contract aimed at retail traders. However, trading volumes dipped into the year-end. The number of Ethereum contracts traded in December fell by 38% compared to November's volumes. Perhaps crypto traders haven't yet got the hang of going short or hedging their positions via the future markets. Looking to the future, Joey Krug, Chief Investment Officer at cryptocurrency hedge fund Pantera Capital, has predicted that up to 50% of all financial sector transactions could one day involve Ethereum. The hedge fund executive believes that moving Ethereum blockchain to a proof-of-stake protocol and away from proof-of-work could prove to be a big bang moment for the cryptocurrency and its community of developers. Ripple's protracted legal battles with the SEC may be coming closer to a resolution. In the latest development, Ripple has rejected an SEC attempt to have the so-called fair notice defense struck out from the case. The SEC alleges that a ruling in a case known as FIFE negated the fair notice defense. Though the case seems to be bogged down in procedure and legal precedent, Ripple's team believes that they have a strong case that could see them win the day or reach a mutually acceptable settlement with regulators. And Cardano is doing its bit for the environment. Blockchains and cryptocurrency mining are often hauled over the coals because of their carbon footprints. However, in an effort to redress some of that imbalance, the Cardano Foundation has funded the planting of 1 million trees in partnership with Veritree, which uses the Cardano blockchain to record the purchase and donation of tree tokens and the planting of trees that these transactions make available. Coinbase stock remains in a downtrend that's been in place since November 9th and is down almost 27% since it was listed back in April 2021. The share price performance likely hasn't been helped by insider selling. SEC data shows that company insiders sold $40.60 million worth of stock in December. The lion's share of these sales were made by the founder and main board director, who sold $31.30 million worth. Coinbase's chief product officer and chief accountant also sold stock last month. However, ARK Invest's Cathie Wood remains bullish on the stock and has used most of the recent dip in the share price to top her fund's holdings, purchasing just under 195,000 shares. Meanwhile, JP Morgan highlighted the growing acceptance of cryptocurrency investing and said that Coinbase is a buy. As a result of this, the bank has an overweight rating on Coinbase and has a $447 price target, some $210 above the current share price.